Let's take a look at the Asian markets. And of course, the big cue coming in from there is the Japanese inflation, which dropped for the third month to hit its lowest level in 22 months.
Paytm Payments Bank has completely reconstituted its board.
46,285 is the first support, which is the 40-day exponential moving average. And then there is the 20-day moving average, which comes in at about 46,068.
So today's standout is in Havells. Interesting report from Goldman Sachs. They've upgraded the stock today to buy from neutral.
We got 22,100 on the Nifty coming through.
From the next year standpoint, we clearly have identified and outlined our launches even in our analyst presentation.
It has also downgraded Whirlpool to underperform, and the target price is cut by almost 11%.
Not too much moving. The range on the Nifty is actually hardly 75 points till now.
As far as the seller is concerned, that, according to our sources, is Bharti Enterprises.
So for the massive stock surge that we've seen, Indian active fund managers have stayed out or perhaps missed out on this one.
I think the way we have to look at is how do we bring access and equitable access of our medications faster into India.
Well, Israel's Prime Minister says his country is ready for a ceasefire, but asks that Hamas drop demands that he calls from another planet.
Sharp recovery which is underway in the markets awake.
Good afternoon and welcome to another edition of Closing Bell. We're coming to you from the Motilal Oswal CNBC-TV18 studios. I'm Surbhi Upadhyaya, with me the two gentlemen, Nigel D'Souza to my left and Manglam Malu to my right. And guys, while the rest of the indices are blinking some green, I was looking at the mid-cap index because over the last 1 hour, that's where bit of a serious decline seems to be setting in.
Well, indeed, and getting into the final hour of trade, you have in fact more number of stocks that are declining in comparison to number of stocks that are advancing. At the start of trade, I recall there were 2 stocks that were advancing for every 1 stock that was declining. But that's done a quick turnaround of sorts, and the mid-cap index is the one that's seeing some bit of pain. I'd mentioned this earlier this morning as well. If the Nifty itself, if the headline index is going to go through a phase of consolidation, I'll be interested to see what goes on in the mid and the small cap indices. For the time being, they're looking a little bit nervous, but don't lose hope, guys. There's a lot of stocks in there. Keep doing, keep looking at it, and there are plenty of stocks that are doing well. The bulk of the stocks today, if you look at the advanced decline ratio, it's on the declining trend. And look at the decline that we've seen on the small cap as well as on the mid cap index. Big money, some money taking off the table.
Some money being taken off the table, Nigel. It's interesting, because it is also the week of expiry, and in that Nifty, usually you see a fair amount of volatility. That hasn't happened for the frontline index at least. They've maintained their range. For the Nifty as well today, it's just about 120, 130 points in terms of range. The Nifty bank is respecting its boundaries. The question everyone is asking is, what is the next big trigger for the market to move anywhere from here? Yes. On the way up, of course, there would be the valuations, which would be a bit of a headroom. And on the way down, there is this strong support, strong, belief that people have that India is, of course, the only game in town for the next 10 years, etc. So it is keeping both sides equally activated. And in the mid-cap and the small-cap end of things, of course, a lot of these themes had run up ahead of perhaps their time as well, which is why some profits being taken off. Though, having said that, a lot of the themes continue to run today as well. Case in point, RailTel, which is up around 10% We're seeing a decent gain come by on names like Senco as well. Quick Heal is doing well. Mahindra Logistics, ICICI Lombard, of course, on account of the large trade that has happened. And then we have Cello World, of course, Motilal Oswal initiated coverage on that one. And there was a note that came in on JK Cement as well. So both those stocks doing fairly well. So there are more losers than gainers, but the ones that are gaining are the ones that continue to move higher.
Well, that's true, but I would sort of caveat RailTel by saying that it's a bit of an outlier. Otherwise, on the PSU screens, PSU banks, a lot of the other PSU stocks, there is some profit taking going on. In fact, the CPSE index or even the PSU bank index, the indices themselves are flashing red. So there is that element of profit taking. But then you have them in the outliers like a RailTel. Just on the overall market, the range has been very narrow for the last couple of sessions. And typically, this is a precursor to maybe some kind of a bigger move, but we don't know when that bigger move happens. So even, yesterday it was about 120 points. Today, again, it's about 130 points on the Nifty. And that's what's going on. And things are extremely choppy in terms of, individual sector moves as well. So while private sector banks saw a bit of a, pullback, which is why the Nifty started seeing some green, PSU banks haven't played ball. And that's not just SBI on the Nifty. Even if you're looking at tier 2 PSU banks, your Central Bank of India, IOB and the likes, a lot of those stocks are tracking red this afternoon. That's one trend. Now on IT, again, trends are very, very mixed. TCS is lending support to the frontline index, and we'll talk about that. There's a big UBS upgrade that's come through for the stock. Some of its peers are still in the red. So it's not like all of IT is moving higher and batting for the bulls. That's not what's happening. So those are some of the things to keep in mind. Just a word here, even internationally, I mean, the rally has kind of paused after the big NVIDIA move and the whole, Wall Street tracking new highs on a daily basis. Yesterday was a pause day. We don't have too much data to track today. The bigger number is on the US inflation side, and that comes out on Thursday. So again, it's a bit of a quieter day for global markets as well, not getting too many cues in. So choppiness is what we have. The question is, how do you play it? And what can you do in terms of your trading strategies or individual stocks on the fundamentals if you're looking at? That's exactly what we are going to track on Closing Bell over the next 1 hour. So let's quickly get started. I think we do have our first guest on the show. Mitesh is with us, I believe. Mitesh, hi, good afternoon. We were discussing this at 11:30 as well, that trading the index is tough today. What are you doing now? Stocks or still looking at some index bets?
So trading the index is practically difficult, but what it looks like is that we've had excursion closer to the support levels or the lower end of the range, which is about 22,060.50 for me, and we got a morning low at about 22,085, and then again around noon, we kind of declined to about 22,100. So I think it's still chopping around. The only trade is that you can take a long around this 22,100 or 10 or points below that and take a 50-point stop loss and hope that the range continues and you get an exit closer to about 22,250, 260 zones. So I think that's the way to approach the index, but I still doubt that it will give a directional move. So it's just playing for a few days, maybe a 1-2 day kind of view and for small gains. One. And on the stock side, I think Bata is something which is giving a good reversal. So that's a buy with a stop at 1425 for targets of 1480. And Apollo Tyre is showing some weakness and it's trading near the pivot level, but I would still want to take a short here. So take a short with a stop at 526 and a target of 500 can be looked at.
Interesting that you picked Bata after a very long time. That stock seems to have shown some signs of life. But Mitesh, just before we let you go, a word on Trent, because after the big rally that it had after its results, it was consolidating a bit, and now it's picked up once again, currently at the high point of trade, still about 5% away from its previous high. Any view on Trent that you have?
The stock has had a very good rally in the last few months, and after a good rally, I think making a peak at about 40.70, 40.80, my sense is that the stock has gone into a sideways kind of an activity, giving you a very broad range of about 3,800 to about 40.80, which is about 280-point kind of range on the stock price. And I still believe that this consolidation will continue. There's no threat to the longer term trend, so I think closer to about 3,800 is where I think traders should look to buy. And after about another couple of weeks of consolidation, maybe we'll have the strength to break out of this and make a new high. But for the timing, I think it looks like a sideways activity.
Okay, all right, that's a view on Trent. Thanks very much, Mitesh. We'll come back to you and get some more ideas in about half an hour's time. But let's get going with some of the most active stocks of the day as well. And TCS is definitely topping the Nifty chart. It is the biggest mover on the index, almost a 3% gain right now. UBS has come out with a positive note on Tata Consultancy Services. So let's find out what UBS is saying. Sudarshan has the details with him. Sudarshan, fill us in.
That's correct. So TCS is top Nifty gainer and contributing nearly 50% to Nifty's gain today. And this comes after brokerage firm UBS has upgraded the stock to buy from neutral, and target is raised to 4,700 from rupees 4,000 per share. And this target price indicates an uptick of 15% from current levels. As per UBS, TCS is likely to lead peers in revenue growth by 100 to 150 bips. Along with an improvement in margin in FY25, UBS believes market is not pricing this in the uptick TCS is expected to see in both revenue and margin, and stock has been at lower end of its long-term trading premium versus peers. Talking about growth drivers, UBS says ramp up of large deals such as BSNL, Nest and Aviva, and revival in BFSI segment and cloud migration projects will drive the growth in near to medium term.
Right, Sudarshan, thanks a lot for that. So that's about TCS doing well in today's trading session. In fact, a lot of the IT stocks are actually doing well in today's trading session itself, more so from the mid-cap end of things. But we do have with us Sudeep Bandopadhyay, who is the group chairman at Indie Trade Capital, joining us now. Thanks a lot, Sudeep, for joining in. Good afternoon. Would you have a view on any of the IT stocks which are doing well?
Well, I like IT generally, and I believe that IT should do well in the coming fiscal. I think the period of underperformance, or rather gross underperformance, is over. US recession, which was a big fear for the IT, I think it's not going to happen. US has managed a soft landing, and that is excellent news for IT. Yes, there are still some question mark over demand coming back the way it was a couple of years back. But I think slowly, IT companies will start getting back their mojo. The orders are coming, not at the speed at which they were used to, but orders have definitely started coming. So the next fiscal for the entire IT pack should be good. We like particularly HCL Tech. I think that's one stock in the large cap we would love to watch and continue to recommend our investors. As far as the mid cap IT is concerned, we are very focused on the niche players. Let's say travel and tourism sector is doing very well, so we will definitely keep watching and recommending RateGain Technologies, Coforge. Let's say this EV transition is the theme which is working very well for the entire industry. So their companies, IT companies, helping that transition. Let's say Persistent Systems or other companies who are in that chain. I think we will like to look at those companies and focus on those.
All right. Thanks a lot, Sudeep. Just while we're talking about the IT pack, also look at the other stocks. A bunch of them actually doing well. Cello World is one of them, surging on the back of a Motilal Oswal note. Sudarshan joins in. The stock is moved a fair amount from its IPO price of close to 650 rupees. This was in November itself. For 3 months, and the stock is nearly at 900 rupees. But Motilal believes that there is space for more. Sudarshan?
That's correct. So Motilal Oswal today has initiated coverage on Cello World with a buy rating, and target is rupees 1100 per share, which indicates 25% uptick from current levels. Motilal Oswal believes company will grow faster than the industry, and it has a strong brand recall in the consumer products industry. It has built a strong brand portfolio including Cello and Unomax, and presence in diverse categories, benefits from growing total addressable market of each of its category. Motilal Oswal expects TAM to see 13% CAGR over FY23-27 to rupees 1.2 lakh crore by FY27 from rupees 74,300 crore in FY23. On revenue and EBITDA CAGR are seen at 18%, 23% respectively over FY23-26. On valuations front, company is trading at 35x FY26 P with an ROE, ROCE of 32% and 39% in FY26 E. Motilal Oswal has given target of rupees 1100 per share, which is premised on 45x FY26 P. Talking about the stock performance, it is up 12% this year, but still down 6% from the record high it hit in January this year.
Okay, all right. Thanks a lot for that, Sudarshan. Well, let's get in Sudeep to comment on this. Sudeep, what's your take?
Well, Nigel, I'm a bit skeptical. There's a lot of excitement in this entire writing instrument and stationery segment. The valuations are at levels which is probably a bit rich, and I will not definitely recommend a buy or remaining invested in some of these stocks which are quoting at these kind of valuations. I definitely see a scope for correction or profit booking in the near future.
Okay, that's a take on Cello World. By the way, I just want to pull up some stocks from the food space. Let's pull up Westlife and see how that stock has recovered from the lows because of the news reports that hit. This has been going on for a while, that Maharashtra could be looking at perhaps a deeper, more straightforward inquiry into the use of cheese, allegedly perhaps not cheese, some cheese alternatives, where is the labeling wrong. And now it seems, that's what Reuters has been reporting, that the Maharashtra government is going to start a proper investigation into all this. So the stock fell off the cliff, but then there's a recovery happening. Sudeep, let me ask you this. I mean, in any case, QSR stocks have not had the greatest year, right? They've been struggling last couple of months and big underperformers compared to the rest of the mid-cap market. Now, in specific for Maharashtra, this issue comes up. It's not so much about adulteration or a very serious allegation as that. It seems to be more a case of perhaps disagreement over labeling. How do you view it? And is this the time to be looking at QSRs when they're underperforming, or best to leave this plate aside?
No, definitely good to look at QSR. I think this is one space which, as you rightly said, has been languishing for some time. My pick is Devyani International. I think this is one stock one should look at with its international expansion and the bouquet it has. I think it's looking very well poised at current levels. As far as Westlife is concerned and the fiasco around this, allegedly using cheese substitute, I think this will pass. Of course, right now there's a lot of confusion. And probably it will give an opportunity for buying at lower levels. But if I have to pick one, as I mentioned, I'll pick Devyani International.
Okay, so Devyani is your pick in the QSR basket. Got that. Stay on, Sudeep. We'll have some more questions for you. We do have to take a break, but as we slip into this break, let's leave you with an exclusive coming in. Here's a slice of a conversation that Ekta Batra managed to have with Sarah McMillan, the country director of the US FDA, and this was at the BioAsia 2024 summit. Ekta started off by asking about the recent cases of issues such as quality of data and data integrity. Take a look.
So while I can't speak to the specific reasons as to why we're finding more data integrity issues, I will say that we are finding them throughout facilities. And so we're finding it in manufacturing as well as laboratory. And when we find data integrity issues that are so extensive in facilities, it really speaks to the quality culture of that facility. And what we want to see from companies is not just a quality motto, which most companies should have and do have. We want to see them empower their employees at every level to make the right decisions regarding product quality and to have the accountability to follow that up. And so that's maybe one of the pieces that we think could solve some of these data integrity issues.
But there was a whole spate or a period of time where Indian manufacturing facilities did not see data integrity issues. It seems to be a resurgence probably in the past 1 year, maybe more so post-COVID. Is that a trend that you're spotting?
It's hard to say. It's hard to say if those issues still existed and we just weren't seeing them, and now we're able to discover them. So hard to say, but now that we see them, we really want to take concerted efforts to fix them.
What is it across the board? Is it facilities across India where you're seeing data integrity issues, or is it specific to a certain location?
Not specific to a certain location. So I think this is something that all of industry can engage in and look to improve practices.
And when you say quality of culture needs to improve, can you elaborate on that?
Yeah, so it really just is allowing employees to make the right decisions and encouraging them to make the right decisions and having the accountability to make sure they're making the right decisions.
So in terms of the trend that we've seen, OAIs, NEIs or VAIs, official action indicated, and the others, what is standing out more in terms of a classification for Indian plants currently?
So I think there's good news for Indian industry on this. Setting aside the data integrity issues, I think in general we're seeing an improvement in compliance. And a lot of that is that right post-COVID we were doing a lot of follow-up compliance inspections. And now we've done more surveillance inspections this past year. In fact, we did over 2.5 times the number of surveillance inspections this past year than we did the previous year. And so as such, we've seen the compliance rates improve and the OAI rates actually drop over the last year.
Is the backlog over in terms of inspections post-COVID in Indian facilities?
Well, backlog is always a tough word, right? Because we always have competing priorities and inspections and prioritization of inspections that really plays into our ability to see all the facilities that we need to see. And so that's a dynamic process for us in terms of prioritizing inspections.
There are many facilities which have had warning letters, import alerts, say during COVID or maybe just around that period, and they still remain unresolved. Why is that? Is that because remediation takes so long, or is that because there is a backlog in terms of inspection?
So if they've been re-inspected, we did see a lot of those re-inspections continue to be non-compliant. And so that means that the remediations were not considered to be sufficient enough to overcome the original problems that were found in that facility. So as such, I'm sure facilities will have a new list of items to address if they've been re-inspected and continue to be found non-compliant.
Welcome back. You're watching us here on Closing Bell. Not much has changed in the markets since the time we started the show, though a couple of stocks are doing better than what they were earlier. Tata Motors is one of them, which has moved higher. M&M is the other one, which too has taken some gains in the last 15 minutes or so. And ITC, which was doing well, continues to do better now at the high point of trade, though on a point-to-point basis, it's just about it's just about a 1.5 rupee gain. But nevertheless, for what it's worth in a consolidating market, these are stocks that are holding up in trade. The ICICI Lombard, however, is surging post a recent block deal. Yash joins in with the details of the buyers and the sellers and the triggers going ahead as well. Yash.
Well, that's correct, Mangalam. As far as the transaction itself is concerned, this was in the pipeline for quite some time now, about 6 months or so. Today seems to have been executed, about 1.4% stake changing hands as far as ICICI Lombard is concerned. As far as the buyers and the sellers are concerned, ICICI Bank, according to our sources, was on the buy side in this particular block deal to that 1.4% stake, adding to its existing stake in ICICI Lombard. The seller, as per our sources, was Bharti Enterprises. With this particular block deal and the change of hands, now Bharti Enterprises' stake in ICICI Lombard is likely to have reduced to 2.3% from 3.7% after the block deal. ICICI Bank's stake in ICICI Lombard, on the other hand, seems to have increased to about 49.31% from the current 47.91%. Remember, this was in September 2023 when the insurance regulator had approved ICICI Bank's proposal to acquire additional 4% stake in ICICI Lombard. Out of that 4%, 1.4% has been executed today, which means part stake is yet to be acquired by the bank in the company. ICICI Bank, is expected to acquire that part 2.5% stake, and Bharti is also left with about 2.3% stake. So, of course, some overhang still remaining from the part of Bharti Enterprises in terms of exiting ICICI Lombard and trigger in the form of ICICI Bank raising that stake by about 2.5%. Now, importantly, out of that 2.5%, ICICI Bank has to acquire about 1.1% before August 2024 itself. Now, it could be, either ways that ICICI Bank looks at an open market transaction to acquire that 1.1% stake, or it acquires that stake from Bharti Enterprises.
Okay, all right, Yash, thank you very much for the details over there. ICICI Lombard in news today thanks to that block deal. By the way, just look at the move on Tata Motors. It's completely zoomed up in top gear. Stock's almost 3% higher. It has dethroned TCS, the other group company, from the pole position on the Nifty. So it's a big, solid move on Tata Motors coming through. We still have Sudeep with us. So Sudeep, some final thoughts here. Insurance, how are you looking at it? Life, non-life, and maybe a specific word on Lombard, if you've tracked it recently?
Surabhi, we like life insurance. And we believe that I think that's got a significant long-term, secular growth potential. And in the life insurance space, we definitely like, HDFC Life and SBI Life. These are the two stocks which we believe has a long-term potential and can be bought at current levels also with a long-term view in mind. As far as the non-life space is concerned, of course, Lombard has been, one stock which we have been watching. This trade which got executed today was expected for quite some time, and the balance part of it is also expected in the near future. When the merger happened of Bharti AXA Insurance with Lombard, that's when I think they went to the regulator and wanted this stake to go up, which is what is happening in parts now. But as far as business is concerned, there are challenges and there are issues as far as the overall general insurance business is concerned. And there are too many moving parts for us to recommend at this stage. So we will keep watching the space, but not recommend a general insurance player at this stage.
Okay, so sticking to the life players. Got that, Sudeep. Good to have you on the show. Thank you for all the perspective and the inputs. We look forward to catching up again soon. Well, with that, just a quick eye back on the screen. The Nifty is again managed about a 60-point up move, going back to that thesis of an extremely choppy session. Look at the way the dips are also getting bought, but at higher levels, there's selling coming in. So very, range-bound choppy market is what we have. The mid-cap index, by the way, has also cut its loss. Still in red, but down about 140 points for the time being. Well, with that, it's time to move on and welcome in our next guest on the show. We have Rahul Singh of Tata Mutual Fund now joining in. He is, of course, the CIO at Tata Asset Management. Rahul, good afternoon. Great to have you on the show. Thanks very much for being with us. So we're talking to you just after the conclusion of the third quarter earnings season. So first things first, tell us that at 20 times on the Nifty, looking at what you've seen from corporate commentary, from the numbers themselves, are earnings giving enough of a reason for this market to move higher?
Yeah, hi, good afternoon. I think the earnings have been by and large okay. It's the revenue growth or the top line growth which is not very good. It is still in single digits, although the profit growth has been, if you look at the top 500 companies, the profit growth has been in the range of 25% for the quarter, which is fairly healthy. But the revenue growth, as I said, has been single digit for a variety of reasons. So I think we need to watch out for any signs of further slowdown in consumption, or if there is a recovery. But otherwise, on the earnings front, after the result season, we haven't seen too much of earning changes at an aggregate level. Of course, each company, each sector is different, but at an aggregate level, we haven't seen too many of consensus estimate changes at the either at the Nifty level or the BSE 200 level, or even more.
So, what did you like the most during this earnings season, and what is it that you were not very happy with?
Well, I think there was a lot to like, of course, in terms of what we saw on the capital goods, as well as the continued momentum on the industrial side or the manufacturing side of the economy. Obviously, urban consumption, rural consumption continues to be slow, and in some cases gone even slower. Also, in terms of the financial services, there is still a lot of confusion in terms of the trade-off between growth and the NIMs. I think that trade-off might continue for another 1 or 2 quarters. But overall, I think while the earnings were okay for the financial services and the larger banks, I think the trade-off between growth and NIMs is what I think the market is still contending with, and whether that's a big enough risk or is just a small, short-term risk of 6 months. I think that is where the confusion was. But as I said, overall, I think the earnings reflected the phase of the economic cycle we are in, which is that for the first time, if you look at the last quarter's GDP growth rate data, first time the GFCF growth was more than the consumption growth, and that is essentially what is coming out in the earnings. So it's no real surprises there. And our own sense, talking to the various companies and looking at the data, is that this momentum is likely to continue the entire this year. And it might become a more stock-specific market from here on, because as I think the first question mentioned, that the overall valuations have gone to 20 times. So the return expectations from equities need to be toned down a little bit. But at the same time, there are opportunities to generate alpha. There would be, at an overall level, the large caps look more interesting from a risk-reward perspective, even though mid and small caps continue to do well. So those are the things one will have to keep in mind when we look at the portfolio from a 12 to 24 month perspective, and not just a 3-month perspective.
Okay, all right. Hi, Rahul. Good afternoon and good to see you in. Where are you placed with regard to this entire PSU re-rating that we have seen on various sectors? Do you think it's almost in the price? We were talking about PSU companies, the entire basket was available at around 15 lakh crore. That's moved to around 55 to 60 lakh crore. But the good news is PAT as well has moved. Net profit has moved up in the, almost the same manner. So where are you placed right now on PSUs? And also, if there is value, in which public sector units are there still value?
Right, a good question. Actually, the PSU rally, if you go back, it started almost 2 years back with the PSU banks, and gradually it spread to defense, where the fundamentals improved for a lot of the defense PSUs. Then it spread to power sector, where again the fundamentals improved, and finally it is moved on to oil and gas. So I would not like to paint everything with one brush. I think they have followed the fundamentals to a large extent. Of course, there will be that 10-20% pocket of PSUs which have which have belied all expectations in terms of the stock returns, and that we need to be careful in that segment of the PSUs, which is gotten a little bit carried away, a little bit ahead of itself. But by and large, if you look at the banks, I think the major part of re-rating is over. But can they sustain a 1% ROA this year also? I think the potential is good. Similarly, if you look at power sector, I think there has been a shift in the way the power sector was perceived in terms of coal being a bad word versus now where I think everyone is realizing that we need to be as much generating power from fossil fuels as much as from renewables. So there is a shift there, which I think is a long-term shift in the stance. On the defense side, I think the valuations have become little expensive, although the fundamentals have improved. And finally, moving to oil and gas, I think it's the most, it's obviously a tricky sector because the way the government plays a role in terms of pricing. But still, if you look at the PSU pack as a whole, I think the valuations for oil PSUs are probably the most reasonable, although they also carry more risk. So I think we are looking at PSUs on a more case-by-case approach and a sector-by-sector approach rather than painting it with one single brush.
Absolutely, that makes perfect sense because these are very different companies, very, very different sectors with their own individual dynamics. Rahul, stay on. We also want to talk to you about IT. That's one sector that you're neutral on, but just allow us to bring in our colleague Pavitra before we talk about your stance on IT, because she's been looking at all the NVIDIA euphoria that's been going on out there and trying to make sense of what that has meant for Indian investors. I mean, people like you and I who invest through Indian mutual funds. So she's looking at the kind of MF exposure that exists, Indian MF exposure that exists with respect to both NVIDIA and overall AI participants. So tell us more about this, Pavitra.
Thanks a lot for that. While the NVIDIA stock has been absolutely unstoppable, right? It is up 64% this year, 240% if you look at the last 1 year, and around 490% over the last 3 years. So let's look at the Indian mutual fund exposure. Let me start off by telling you that it's not a lot. This is data compiled by ASMF and Fisdom Research. So the total Indian mutual fund holding in NVIDIA is worth around 1,700 crore rupees. If you look at it at an AMC level, it is Motilal Oswal which has the highest exposure. It's around 440 crores like you can see on your screen. This is followed by Mirae at 280 crores, Franklin at 200 crores, you have Axis at 170 and Kotak at 143. There are a few more, but I'm just going through, the top 5 over here. What I want to point out is that, there is a clear passive in here. The non-broad-based passive exposure to NVIDIA is around 980 crores. The 5 passive funds with the highest exposure are on your screen as well. So you have Motilal at the top. In fact, Motilal with both of their schemes together has around 430 crores of this 980 crores in terms of exposure to NVIDIA. There's also 600 crores which comes in via broad-based passive funds. And this is where it gets very surprising. Active funds together have just under 130 crores in NVIDIA. So much, much lower than what the passives have, just on account of tracking the index. And this is via only 2 schemes, the Axis Special Situation and the Axis Growth Opportunities as well. So for the massive stock surge that we've seen, Indian active fund managers have stayed out or perhaps missed out on this one.
Interesting one there, Pavitra. But tell us more about the active funds exposure to AI stocks, because that's also the buzzword these days.
This is, I've decided to look at the other AI stocks, and this is what really stood out to me. The NVIDIA stock is hugely under-owned by Indian active mutual funds and mutual funds that definitely like AI players, right? So I looked at only those stocks. Before I get to that, let me just take you through the 8 companies that are identified as making up the AI pack. You have Alphabet, Amazon, Advanced Micro, NVIDIA, of course. The list is on your screen. Now, active funds with significant AI investment include the well-loved Parag Parikh FlexiCap Fund, the SBI Focused Equity Fund, SBI FlexiCap Fund, SBI Magnum Global Fund, and the ICICI Pru. These are the larger ones that I'm mentioning. Now, all of these funds have significant exposure to AI stocks, right? Parag Parikh holds Microsoft, Amazon, Alphabet, Facebook. So it has 4 of those stocks. SBI Focused Equity has a big chunk in Alphabet. Around 7% of their portfolio is in this one name. SBI FlexiCap Fund has both Alphabet and Microsoft. The Magnum Global Fund has exposure to Alphabet, again over 7%. They also hold Microsoft, and the ICICI Pru US Blue Chip also has exposure to Alphabet, Amazon, and Microsoft. Now, the common factor and the reason why I'm going through this long list is to show you that none of these funds that like AI feature NVIDIA in their list. So they don't have AI in spite of the fact that they definitely like the AI theme.
All right, Pavitra, thank you very much. Interesting analysis there coming through with respect to how Indian asset managers are investing in some of this, the blue sky technologies out there, including AI. Rahul, so that'll make that our last question to you. As I said, I know that you folks are neutral on IT right now, but then there are, a lot of these new areas of opportunity. And, there are funds that are also taking global exposure. How are you looking at not just pure play IT services, but some of the other areas as well? Do you see anything, moving here, changing here?
Yeah, sure. I mean, although we are neutral to underweight on IT services in general in our, broader diversified funds. But if you look at our digital fund, which is, which is a very large fund, we have exposure to some of these emerging themes. More importantly, even within India. So we looked at, so for example, when the 2021 IPOs happened for the new age companies or the e-commerce companies, we by and large stayed away. But we have seen that these companies have also started focusing on profitability. They have a much more robust business model than what they had in 2021 when they IPO'd. So we have a fairly decent weightage in some of these companies in the Indian e-commerce or fintech or if you want to call it the new age space. So we are selectively looking at it, but again the call becomes very, very stock specific rather than looking at it as an asset class. We have to look at it now on a stock specific basis, and some of those companies do have a fairly robust business model now. And revenue model, and soon turning profitable as well.
Okay, so have an eye on a lot of these emerging technologies, maybe not AI, but a lot of the other payment technologies and whatnot, and consumer tech companies that we've seen list of late. Thank you very much, Rahul. Good talking to you, and good having you on the show this afternoon. Well, with that, we do have to take a very quick break. We'll come back, as always, get you a check on all the buzz from dealing rooms. So Nimesh is going to be with us for D Street Chatter, and then some final trading ideas coming up with Mitesh as well.
Welcome back. Well, the market's still holding with solid gains. We're up close to around 80 points. The mid-cap index, well, it's underperforming a little bit, but those crisscross lines from the time we started off the show, well, they've got a little bit closer to each other. So I think we should get that up for you on the screen. But as promised, it's time for our favorite segment, D-Street Chatter. Nimesh joins us to tell us what is he hearing in terms of dealing room chatter. Nimesh?
Hi, Nigel. A bit surprising that the markets are holding up in today's trade despite such, selling pressure is what I'm indicated. So the flows are quite negative is what I understand, and it's across the board. So that explains a bit of, underperformance in the broader markets in today's trade. I guess the Nifty is holding up thanks to some large cap names, including TCS and a couple of large names. But otherwise, in general, there is a sense of profit booking across the board and in the large cap names as well. The theme seems to be the underperformance of the PSU. So entire last week the PSUs underperformed, and that's been the case today as well. So barring rail PSUs, most of the other PSUs seems to be under pressure today, whether it's power or OMCs, all are under pressure and seeing a bit of profit booking. So that's one space which has relatively underperformed in the last week, 10 days or so. Expect higher volatility because we are in the expiry week, so that's the trend to watch out for. But after expiry, there will be two big flow events to watch out for: the MSCI rebalancing. That's going to have an impact of close to $1 billion of flows, and also the FTSE rebalance will have an impact on the individual names. Plus, on top of it, maybe we are going to see the Nifty or the index rebalancing also very soon. So that's technical things to watch out for. But I guess today's a bit of resilience is a bit surprising, given that the FI flows are quite negative.
All right. Interesting outlook out there from the dealing room. Nimesh, this at the time when the Nifty is now just inched above that 22,200 mark. Individual stocks, what do you have? What are the tidbits that you're picking up?
Well, so in terms of individual names, the first stock is Dixon Technologies. That's been under pressure today. Of course, we highlighted the Jefferies downgrade as well. But apart from that, there are sell flows from larger FIs. So expect higher DW volumes, and that too on the negative side. So that's a Dixon under pressure today. The second is the combination of IOC and BPCL. Well, both the stocks are under pressure today, largely on part of the PSU basket. But there are first signs of small buying interest as well from larger FIs and larger institutions in both IOC and BPCL. And also remember, the SBI's energy fund got closed, so that inflow should also start happening in days and months in the PSU basket. So that could be the technical factor for some bit of buy flows there. The third name is L&T Holding Finance. That's a bit of a surprise move in the NBFC basket. It's relatively outperformed. And I understand for the last couple of days, the delivery volumes are quite high, and looks like some long-only fund are quite active buyers in L&T Holding Finance. So that's the third name. And the last is BLS International. Within the mid-cap, small-cap names, this one stock is relatively outperformed, good volumes as well. I understand some large HNI investors are quite active buyers, and hence an outperformance in that stock in a weak market today.
Okay, all right, got that. Thanks very much, Nimesh. Indeed. Look at the move of the market once again. We are practically back at the highs of the session. There's a 80-point move up on the Nifty, and again, it's 22,200 on the board. So it's really all over the place this afternoon. Well, that's the market. On that note, let's quickly bring Mitesh back in. Mitesh, if anyone was trying to trade the index, they'd have a huge headache by now, I'm sure, considering how, you're being whipsawed on both sides. But you tell us any more specific trades, any other stocks you'd look at, and maybe throw in a word on Bharti Airtel. That's the one that's seeing a good move now as we're heading for the close.
So we'll start with the stocks on the BTST side. IndusInd Bank, I think, is closing near the day's high. So BTST with a stop below 1483 for a target of 1520 for tomorrow. And a similar setup is happening on the charts of L&T, which I would recommend BTST with a tight stop at 3492 and a target of 3540. And coming to the chart of Bharti, I think Bharti, after peaking out at about levels of closer to about 1200 in January, I think it's gone through a correction and has had multiple bottoms around these levels of 1110, 1105. And today, I think also we got an intraday low of 1101. I think it's doing some base building. So technically, it looks good to me. It should give a bounce to about levels of 1150, 1155. But once it crosses that, good chance that it will try and make a new high.
Okay, all right, Mitesh, thank you very much for joining us today. You have a good rest of the evening, and we look forward to connecting again tomorrow. Well, we do have to take a quick break on that note, but as we do that, let's get you a CNBC-TV18 exclusive. Ekta caught up with Shraval Patel, Managing Director of Zydus Life Sciences at the BioAsia 2024 Summit, and started off by asking him about domestic formulations and, of course, the business trends in the quarter gone by. Take a look.
So I think we have been, over the last 6 to 8 quarters, doing a lot of changes to the business. It's been a legacy business, a business that has been there for a very long time. So pruning the portfolio, increasing the reach, making sure that we have the right teams focusing on the right therapies. I think all of that was the first part of the exercise that we did. Then I think a clear focus on our innovative portfolio. So today, if you look at it, saroglitazar, desidustat, rabimaps, all the ADC, new ADC, we launched the monoclonal antibodies, and also incremental innovation like dihydrogesterone and other things. I think all of them are really scaling up as new molecules and new products. And with that effort and a good base business that is done well, I think we have seen good growth, and we have been aspiring to do a double-digit growth. This was obviously an exceptionally good growth for the quarter. But I think our efforts are on to make sure that going forward also we continue to deliver on at least market equal to growth.
Okay. In terms of India, it's around 40% of your total sales. Any plans to scale it up, say, via M&A?
So I think we obviously, tactically, we do keep looking at opportunities to see what could better fit the organization. I think what is important for us is not only scale, but how do we grow from whatever we are able to acquire. So I think a growth driver is very critical in terms of what we look for acquisition. I think what we as the company have done well is to acquire brands and fit them right into the ecosystem that we have. So that would be our first priority, to see how, if we are able to buy tail-end brands or brands that are getting divested either as the first opportunity. But yes, we keep our eyes open to see if there are other opportunities out there. But I would say we are not aggressively pursuing any M&A when it comes to large M&As.
Well, definitely, because I haven't heard Zydus's name, around the Novartises of the world or the Ciplas of the world. So large-scale M&A is not something that you all would consider.
I don't think one can ever say we will not do anything, but currently our focus is to be more specific and targeted. But if the right opportunity comes up, we would definitely evaluate it, and if it makes sense for the future growth and continued growth, then we would look at those opportunities.
Why are MNCs such as Novartis probably looking to shed off their assets here?
I guess it's also to do with the similar problems that they face, right? It's a legacy business versus the new molecules, and I think I would assume that the investments that go beyond new products is far higher than the legacy businesses. So I think it may be a more focus-oriented or a global focus that they have on particular therapies, which is what they would probably want to promote here. Could be one of that, and always Indian companies are very competitive and challenging, I would say, in this environment. So I think that also must be playing some role.
US sales, they were flattish in the previous quarter gone by, $221 million. Why is that? How much did Revlimid contribute? What can we expect in terms of a quarterly run rate?
So in the last 2 quarters, we don't have any Revlimid sales. So we don't. So I think all of the sale is non-Revlimid. Revlimid is the quarter one phenomenon for us. I would say we had a decent quarter. It's a year end when distributors are also looking at normalizing their inventories. And I would also say that the business has done very well because the new products, while we may have had attrition, but the new products have contributed good to margin. So if you look at the overall margin profile of the company, even without Revlimid, has been very good.
I'll get to margins, but quarterly run rate for the US, when do you scale up beyond 220?
So quarter 4, quarter 1, obviously, we'll see a large scale up in revenue.
All right. Asacol HD, that's expected to see competition soon?
So far in the very, very near future, we don't see it, but we do expect, as we have expected every year, that this year we'll see competition. So our current assumption goes that in FY25 we will see some competition on Asacol, but I think we have had our fair share of exclusivity that we have enjoyed. So
markets meandering between red and green. We have a bunch of stocks which are moving around. I mean, Vodafone Idea, ahead of that outcome of the board meeting with regards to their fundraise, is now down about 6%. India Bulls Housing Finance lower. Shriram Finance, we've been spotting the way it's moved with lower volumes. Rain Industries continues to decline, but a lot of stocks also moving on the way up. On the whole, the market's not moved much in the last 5 minutes, but the mid-cap index though has ameliorated a little from the losses that it saw at the start of the show itself. We have Jay Bala joining in with his views on the market. Jay Bala, CMT at cashthechaos.com. Jay, thank you for joining in. We're consolidating after a near record rally on the markets. Where do you see the indices go from here?
Hi, Maglam. This price movement of the Nifty, it looks like a distribution to me. I've been mentioning this since last week. And the most important chart is that of Reliance. And I've been saying that too. The index managers have been using that to keep the mainline indices up. And if Reliance were to drop below 2907, that would be a warning sign that the distribution has probably come to an end. So watch 2907 on Reliance like a hawk. It's going to be very important. And likewise, SBI and ICICI for the banking sector is going to be pretty important. We are seeing slight price expansion for SBI, but we need little more. If SBI were to drop, say, something like 700 in the next few sessions, say from now to next Monday, that will be a signal of price expansion to the downside for the banking sector. So these are the two I'm watching. The important support for the Nifty is at 21,500, and the resistance for the banking index is about 47,700. So I'm watching these as the bull-bear divide line for the markets.
Okay, all right. Hi, Jay. Jay, just hold on to that thought. Just want to speak about a couple of stocks. Macrotech Developers, that one has clearly seen some big action today. If you just look at the intraday chart, it's now moved to the high point of the day and a bit of a spike up out there. So I'll be interested to see what goes on with that one, because clearly there is some bit of buying interest. It's been a trend day of sorts. Any kind of dip is getting bought into, so just keep an eye out on that one. Jay, we wanted your view on the index itself. We have had a good run. At the start of this series, we were mentioning that the FI is a net short. And history suggests that when the FI is a net short, you have a good run. It happened yet again. But what's your view, with the March month in mind, the end of the fiscal year? How do you see the Nifty move?
Yeah, see, if you, I look at markets from, multiple asset class perspective, and I turned bullish on Bitcoin in October, and I had even said that, we should abandon banking index and go for the Bitcoin, and that's panned out really well. The reason why I'm bringing Bitcoin is an expression of animal spirits. So as long as that's up, we could see animal spirits sustain in the Indian markets. But looking at the Nifty in isolation, the move from 21,500 and change looks incomplete. So probably got a final higher high to come through, but that will not be pushing the index much higher. The resistance comes to about 22,400 to 22,500. So I expect the index to be capped. And so that's the price expectation on the price movements of Nifty.
Okay, specifically on banks, on SBI or any of the other large frontline lenders, do you see a clear trade on any one of them on the way up or the way down?
Yes, I do, Surabhi. I'm slightly bearish on Axis Bank, and the reason why I'm seeing that is because Axis Bank could have had a truncation around the December-January highs, and when markets don't proceed beyond an expected point and fall short, that's a slightly bearish indication. So you use 1111 as a stop loss for Axis Bank. This could drop as sharp as 925, but 1,000 is the conservative estimate. But 1111 is a very important stop.
Okay. All right, Jay. Got that, Jay. Thank you very much for giving us some perspective on what's been a very, very choppy session, actually. So let's start wrapping this up. As we said, it's been all about this 130, 140 point range. For what it's worth, the Nifty is going home with a 70-point win. But the bank Nifty is showing absolutely no sign of direction, absolutely flattened out. Mid-cap index is also flat, but that's a good thing because mid-cap index was falling a lot more just about an hour ago. If we talk about the Nifty, Today's winners include Tata Motors and TCS, so the duo from the Tata stable doing well. IndusInd Bank was the best performer in the banking pack. But then on the flip side, you have a SBI, which has exerted lots of downside pressure today. And then you have some other moves and shakers. Titan had a good session, L&T, Bharti Airtel. These are some of the stocks on the upside. Pharma actually had a decent day. Cipla, Sun Pharma. These are some stocks that saw some green, but extremely mixed trends today.
Right, the mid-cap end of things, when we started, we had more stocks advancing than the number of stocks that were declining. But towards the end, rather sometime in the middle of the session, we did see that crisscross line overturn, and we end with close to 1450 stocks on the red side with 850 stocks in the green side itself. Among the top losers, we had Shriram Finance, which was down, a sharp fall that we saw in the last hour of trade with fair amount of volumes. NMDC was the other one, which is down 4%. We saw a cut in Indiabulls Housing Finance as well. Vodafone Idea, ahead of the outcome of the board meet on fundraising, saw some money being taken off the table after a big move that we've seen in the last couple of months itself. In the PSU pack, we did see some, declines in names like REC, PFC, HPCL, IOC, etc. But the stocks that were gaining, we had Havells did well, Intellect Design did extremely well, ABB and Trent, all of them were among the top gainers, Nigel.
Just in the final few minutes of trade, I think we had large trades taking place on Piramal Pharma. So we'll be interested to see who exactly with that. I think it's close to 2 million shares that did change hands towards the end. So Piramal Pharma could be a stock to track as well. For the time being, though, we'll wrap up on this edition of Closing Bell. Markets Forward comes up next.